Good morning and welcome to today's episode of Crypto Pulse, your daily dose of cryptocurrency news and analysis. I'm joined, as always, by my co-host. Today's episode is shaping up to be a big one with some significant developments in the world of crypto ETFs and stablecoins.
That's right. We've got a couple of major stories to dive into. The first one is coming out of the SEC, which has fast-tracked approval for the Bitwise Bitcoin and Ethereum ETF. This is a hybrid ETF that will offer investors direct exposure to both Bitcoin and Ethereum in a single fund.
That's huge news. And what's even more interesting is that this is one of the first times we've seen the SEC move so quickly on a crypto application. It's possible that this signals a shift in the regulatory environment, with the new SEC leadership taking a more favorable view of cryptocurrencies.
Absolutely. And it's worth noting that this ETF will be listed and traded on NYSE Arca, which is a major exchange. This is going to give investors a lot more access to Bitcoin and Ethereum and could potentially bring in some new institutional money.
And Coinbase's custody business will be overseeing the fund's holdings, which adds an extra layer of security and legitimacy to the whole operation. I think this is a big win for the crypto industry as a whole.
Definitely. Now let's talk about another big story that's been making waves in the crypto world. Tether is launching its $140 billion USDT stablecoin on the Bitcoin and Lightning networks.
This is a huge deal. Stablecoins are becoming increasingly popular for everyday uses like payments and remittances. And this move by Tether is going to make it a lot easier for people to use USDT on the Bitcoin network.
That's right. And the integration with Lightning Labs' Taproot Assets protocol is what's making this all possible. It's going to allow for faster and cheaper transactions and could potentially spur a lot more activity on the Bitcoin-based ecosystem.
I think this is a really interesting development, and it's going to be worth keeping an eye on to see how it all plays out. We'll be diving deeper into both of these stories throughout the episode and exploring what they mean for the future of crypto.
As we were just discussing, the derivatives market is heating up, and it seems like Coinbase is making a big push to get in on the action. They're planning to launch cash-settled Solana futures contracts on their regulated derivatives exchange.
That's right. If approved by the Commodity Futures Trading Commission, these contracts would offer investors a new way to bet on the price of Solana without actually holding the asset. It's a big move for Coinbase as they try to expand their offerings and compete with established players in the space.
Building on what we discussed earlier about the importance of diversification in the crypto market, this move by Coinbase seems like a smart play. By offering futures contracts, they're giving investors more options for managing risk and potentially increasing their returns.
Absolutely. And it's worth noting that this isn't the first time Coinbase has explored derivatives. They've been actively working to build out their derivatives exchange, and this Solana futures launch is just the latest step in that process.
Speaking of exchanges, Kraken is making some news today as well. After being forced to shut down their staking products in early 2023 due to SEC pressure, they're now reintroducing on-chain staking for U.S. clients in 39 state territories.
That's a big deal for Kraken customers. They'll now be able to stake 17 different assets, including ETH, SOL, DOT, and ADA. It's a significant expansion of their offerings, and it's likely to be a welcome move for customers who have been looking for more ways to earn returns on their crypto holdings.
It's also worth noting that Kraken had to pay a $30 million settlement to the SEC back in March to resolve charges related to their staking as a service platform. So it's clear that they're taking a more cautious approach this time around.
That's right. And it's likely that other exchanges are watching Kraken's move closely. The regulatory environment for crypto staking is still evolving, and it's unclear how the SEC will respond to Kraken's re-entry into the market.
Well, we'll be keeping a close eye on that story as it develops. In the meantime, it's clear that both Coinbase and Kraken are pushing hard to expand their offerings and stay competitive in a rapidly evolving market.
That's right. And as always, we'll be here to bring you the latest news and analysis as it happens.
As we discussed earlier, the growth of the crypto market has led to an increase in adoption among institutional investors, but it also raises questions about the best way to gain exposure to the market. Miguel Kudry from L1 Advisors recently broke down the differences between direct ownership of cryptocurrency and exchange-traded funds, or ETFs.
That's right, and it's an important distinction to make. With the launch of Bitcoin and Ether spot ETFs in 2024, we saw a surge in growth, but now the lines between spot crypto ETFs and direct ownership are starting to blur. What are some of the key differences between these two approaches?
Well, direct ownership of cryptocurrency means that you hold the actual coins in your wallet, giving you full control over your assets. On the other hand, ETFs allow you to gain exposure to the market without having to hold the underlying assets. This can be a more convenient option for some investors, but it also means that you don't have direct control over your assets.
That's a great point. And what about the evolution of these two approaches? How do you see them changing in 2025?
According to Miguel Kudry, we can expect to see a convergence of these two approaches. As the market continues to grow, we'll likely see more investors looking for ways to gain exposure to the market, and ETFs will become a more popular option. At the same time, direct ownership will continue to be an attractive option for those who want full control over their assets. Potentially.
Speaking of attractive options, have you heard the story about the $400 Bitcoin mining rig that supposedly mined a $330,000 reward?
Yes, I have. It sounds like a dream come true for any Bitcoin enthusiast, but as it turns out, the story is a bit more complicated than that.
That's right. According to Decrypt, the solo miner did manage to mine a block using a cheap home machine, but the reward wasn't entirely unexpected. It turns out that the miner was part of a larger mining pool, which increased their chances of solving the block.
Ah, I see. So it wasn't just a matter of luck. The miner had actually joined forces with other miners to increase their chances of success. It's still a great story, but not quite the rags to riches tale that it initially seemed.
Exactly. And it highlights the importance of understanding the nuances of the crypto market. Whether you're investing in ETFs or mining for Bitcoin, it's crucial to have a clear understanding of the risks and rewards involved.
Absolutely. And that's why we'll continue to bring you the latest news and insights from the world of crypto. Stay tuned for more updates and analysis.
I'd like to revisit the point you made earlier regarding the role of regulation in the crypto space. It seems like we're seeing more and more calls for modernization and flexibility in the way we approach these markets.
Absolutely. And one of the most interesting proposals I've seen in a while comes from Robinhood CEO Vlad Tenev. He's advocating for tokenized equity sales as a middle ground between exempt securities and public offerings.
That's right. In a recent Washington Post op-ed, Tenev argued that by putting securities on-chain, we could deepen the pool of capital available to businesses of all sizes. This approach could really help level the playing field and make it easier for smaller companies to access funding.
And it's not just about small businesses. Larger companies could also benefit from this kind of flexibility. By tokenizing equity sales, they could potentially tap into new sources of funding and reduce the complexity of traditional public offerings.
Aaron Brogan, managing attorney of Brogan Law, has been vocal in his support for Tenev's proposal. He sees it as a way to bring more efficiency and transparency to the capital markets, which could have a major impact on the overall economy.
Speaking of efficiency and transparency, let's take a look at the latest market update from CoinDesk Indices. The CoinDesk 20 index is currently trading at 3,829.35, up 1.8% from Wednesday.
That's right. And it looks like all 20 assets in the index are trading higher, which is a great sign for the overall health of the market. Litecoin LTC is the standout performer, surging 16.7% over the past 24 hours.
That's a huge jump. And it's not just LTC, Polkadot DOT is also up 4.8%, making it another top performer. On the other end of the spectrum, XRP and XLM are lagging behind, but still managing to eke out small gains.
It's interesting to see how these market trends might be related to the broader regulatory environment. As we discussed earlier, clearer guidelines and more flexible approaches to regulation could help drive even more growth in the crypto space.
Absolutely. And with proposals like Tenev's gaining traction, it's possible we'll see even more innovation and investment in the months to come. We'll continue to keep a close eye on these developments, and bring you the latest updates as more information becomes available.
And that's not all. We've also got our eyes on some other big stories in the crypto world. We'll be diving into those in more detail later in the show. But for now, let's keep the conversation going. What do you think about Tenev's proposal, and how do you see it impacting the crypto space?
I have to say, the meme coin space is always full of surprises. Earlier, we talked about these Grand Theft Auto themed meme coins flooding Solana, and I think it's worth revisiting that story. What's your take on this? Are people just getting caught up in the hype around Grand Theft Auto 6?
Absolutely. And it's not just the hype around the game itself. We've seen this time and time again in the crypto space, where a popular culture phenomenon sparks a wave of new meme coins. It's almost like a reflex at this point. But as we've also seen, these coins are extremely volatile and often end up losing a significant portion of their value shortly after launch.
That's right. I mean, look at these two examples we mentioned earlier, GTA 6 coin and GTA Guy. Both of them reached a market cap of over $1 million in a day, but then promptly fell by over 90%. It's just not sustainable. And yet people keep jumping into these coins, hoping to make a quick profit.
And that's exactly the problem. People are treating these meme coins like they're a get-rich-quick scheme rather than taking the time to do their research and understand the underlying value proposition. It's a recipe for disaster. I mean, we've seen it with Dogecoin, we've seen it with Shiba. These coins can be fun, but they're not a serious investment opportunity.
That's a great point. And speaking of serious investment opportunities, what about this story around the Telegram game Farm Friends and their delayed airdrop? It seems like the developers are having some issues with TON, which they're calling the closed network.
Ah, yes, that's a really interesting story. It highlights the challenges of building on a platform that's not as open as it claims to be. I mean, TON is supposed to be the open network, but it seems like there are some significant restrictions in place that are limiting the ability of developers to launch their projects.
And that's not just a problem for Farm Friends, it's a problem for the entire ecosystem. I mean, if developers can't launch their projects on a platform, then what's the point of even building on that platform in the first place? It's a real concern for the future of TON.
Absolutely. And I think it's also worth noting that this is just another example of the challenges of building in the crypto space. There are always going to be unexpected twists and turns, and developers need to be able to adapt quickly in order to succeed.
So as we wrap up today's show, what are your key takeaways from the stories we've covered?
Well, I think the main thing is that the crypto space is always full of surprises. Whether it's the rise and fall of meme coins or the challenges of building on a particular platform, there's always something new and unexpected happening. And I think that's what makes this space so fascinating.
Absolutely. And I think it's also worth noting that despite the volatility and the challenges, there are still some really exciting projects and developments happening in the crypto space. We just need to be careful and do our research before getting involved.
That's right. And as always, we'll be keeping a close eye on all of these stories and more. So be sure to tune in tomorrow for another episode of our daily crypto news podcast.
Thanks for joining us today, and we'll catch you all on the flip side.